All right, we should be up on YouTube also if you guys would like to watch instead of listen. Mike, give me 1 second. Let me give you co-host here. Rolf, good afternoon. How you doing, buddy? Steven, I don't know if you're at work today or not, but I'm going to send you a invite to speak, and if you can, come on in. I think I talked earlier this morning with Frank and Avid Trader. Hopefully they are able to join in with us as well this afternoon. And the goal here is just to have a chat, some different perspectives. There is a wide variety of thoughts, and we want to be able to share those. Mike, can you speak and let me make sure my audio is good on my end?
What's up? Good afternoon. I'm here. You hear me?
Yeah, I hear you. All right.
Okay.
Just wanted to make sure I didn't have it set on headset since I don't have those on today.
How's your day going, Tom?
Not too bad. Just taking it easy today, as we should on a holiday, right?
Yeah, we're actually running around with the kids playing horse racing inside the house, man. Exhausted, bro. Sweating.
I had a lot of outdoor projects in this past week, so today's kind of like my recovery day, and I have a little bit more to do today, some seed planting, but that's going to be nice and chill indoors. So,
what's the temp out in Texas?
Gosh, it must be over 60 today, I would guess. It's okay. Sunny and warm, but it's been cold at night, like in the high 30s.
Oh, well, okay. Not too far off where we're at. It's actually raining right now, and it's 58, but it's getting down to like the mid 40s, so not too crazy.
It says our high today is going to be 69, low 35. Yeah, I was pretty close.
Not too bad. Not too bad.
So while we're waiting on Frank and Avid, Mike, I was talking to you briefly earlier this week, and you mentioned because, well, if people haven't tuned in before, you're not the biggest fan of Adam Aron, but you are long on shares. And you told me that maybe your sentiment on the AMC play is changing a little bit. Can you start us off and tell us what you're seeing, what you're thinking? By the way, guys, nothing here is financial advice. This is just a few traders sharing thoughts like we do every day. We're just sharing them here with you live, and we'll bring some of y'all on for questions also.
So just to give you a quick synopsis of my ideas, as everybody knows, I'm not a big fan of Adam Aron, but this might be one time that I see Adam Aron not being able to fuck this up, because he's in a position with institutions, just by the way of the market itself. I've always, actually previously I've been bearish on AMC. I've been playing puts on AMC. I've been doing that whole thing. But my sentiment as of last week has changed, which we actually, as of market close on Friday. Now, the reason for that is because I believe leading up to earnings that there's going to be nothing but maybe, I don't want to say good news or great news. There's just going to be news that's going to help move the stock forward. Do I think that, I personally think that all the stuff is priced in for the most part, maybe 90-95%. All the bad info is priced in. And they're expected to lose money. That's expected. But I think he's going to have a lot of positive things to say. And this has nothing to do with the shareholders. My opinion that he doesn't give a crap about shareholders at all. But he cares about the institutions and the people that are buying. And institutions are actually buying it. I think right now it's like at 37% and climbing. And I believe that once that breaks over 50%, I got that from Super Steven, by the way. Once that starts breaking over 50% and starts seeing 50, 60%, there's going to be a lot of momentum. Now,
can I interrupt you for a second?
Sure.
And let's try and keep the conversation going back and forth, and so we don't have one person monopolizing everything. That doesn't mean I don't want you to talk, but I want to make sure we have a back and forth conversation.
Gotcha.
the 37 or 38% institutional ownership. I saw that screenshot going around, so I just wanted to comment on that real quick. The website that came from, Mike, had the wrong free float.
Okay.
So it was showing 197 or 198 million, and we know now that there's 247 million at least. So all that means is the percentage is not 37; it's something lower than that. I didn't do the math, but
let's call it 20.
Yeah, it's probably in the 20s.
Okay.
So, but that doesn't change my conviction, and it probably doesn't change yours. And we were talking today on Twitter, and I don't know if you've seen this one yet, but if you go search on Twitter for Renaissance Technologies, or you look for them on the most recent 13 Fs on Fintel, the one that was filed February 13th from Renaissance Technologies, which I know nothing about, Mike, they increased their position from their November filing to the February filing, which is time periods ending September 30th and December 29th. They increased their position on AMC from about 38,000 shares to 4.8 million shares.
Now that's massive right there.
That is
massive. That's really massive.
Now that doesn't mean that we know what it is today, but we know that was a 14,000% increase at the end of the year.
That just piggybacks on the reason why I'm bullish. But let me clarify. You said I have long shares. I'm not long on AMC. Okay. I have long shares. I have regular shares. You know how I trade already.
You own shares, you're long, right?
Right. But I will be taking profits pretty quickly.
I'm just saying that so that people don't think you're shorting. You're not short shares. You're not short selling the stock, right?
I should. No, I'm just kidding. No, I'm not short.
If you have puts or calls, that's one thing. But when I say someone's long, I know that you're a shareholder.
Temporarily shareholder.
Right. That's fine. That's fine. There's no hate here. If you're a shareholder for a day, a month, or a year, you're still a shareholder right now.
And one thing that I did, previously, I think we discussed my position on private discords. I actually sold up my whole position before there was a move to the downside, and actually had puts on it. And then when I bought back in at 435, when I was able to get my average down, always with profits including, to 355, and that's where I stand now. And I could add a little more to that from the puts that I had for 40 hours that I bought on Wednesday to Friday. I played weeklies. It's dangerous. I know that Steven and a couple other people saying that you shouldn't do that because AMC has momentum, but I played it not because it was an AMC thing, because it was a market thing. You had CPI earlier in the week and then PPI coming out. And I think it was going to just piggyback on top of each other and just have, bad news. But one thing, I just say this, at AMC, it overreacts when there's bad news in the market and it underreacts when it goes up. I'm a big believer in that. What's your thoughts about that, Tom?
Yeah, I mean, I don't know if I have a comment on the underreacts. You said it underreacts when there's good news.
Right, and it overreacts when there's bad news.
It definitely overreacts when there's bad news. I don't know that I have enough data to say the other, but I'll let you go with it for now.
And then and so this week coming up, it's a short week. You said today is a holiday. To me, I'm going to be the position I have. I have long shares, but I'm going to be buying calls. Now the thing is, I don't know when I'm going to be buying those. I do see there's upside. I like the potential for AMC over the next 3 to 5 weeks, March 15th particularly. Any move to the upside that's decent, I'll be taking profits. I think that when people see or think AMC, or when I say AMC and I'm bullish on AMC, they think, well, you just said that, you have my own idea, which we're not going to get into, right? Because I know we've had this discussion many times about, I think in 5 years, there may came bankruptcy and all sorts of good stuff. But in the short term, there's money to be made up and down. And right now, I think the short term, there's money to be made to the upside. And I think AMC it looks good. I know there's a lot of things going on with the AMC, and, we know about just what everybody thinks about AMC just across the board. But for the short term, I actually like AMC, and I'm very bullish on AMC. That's why I said, I'll take profits. And I'll be buying calls, but I just know when. I can see what the price action looks like. I see the volume looks like. There's a lot of indicators that's going to tell me when I should get in. Maybe I should be patient, and what I'm going to do. But definitely going to be in some calls before earnings, 100% before earnings. As to how many, I don't know.
I was thinking about that over this weekend too, because I have a decent amount of shares that I was buying as we dropped, and I don't like buying on the way up. And my cost basis is very close to the current price. So I don't want to average up, Mike. But I was thinking about possibly adding some calls. And I think you and I have very similar ideas about where it's headed price wise over the next couple of weeks. I think my thoughts dovetail with yours that unless the market absolutely tanks or Adam Aaron comes out with some bad news, that the tendency would be for it to go up prior to earnings.
This is one thing I wish retail will understand. Retail apes, I don't care, whoever, anybody just out there, I wish they would understand that there's opportunities. You don't have to just wait for a squeeze. You don't have to just diamond hand. And I know that, you have shares that you held before the conversion stock split, the conversion in the reverse stock split, and you're deep in those. I know people don't want to get rid, and you shouldn't have to. It's like, why get pennies on a dollar? There's still that what if moment, right? It's still anything is possible, hopium or however you want to call it. That's fine. But you also get what you have and create a new position and take profits like that. I mean, I don't see nothing wrong with that. I think people need to learn a little more in depth of maybe trading instead of just diamond handing or hodling. Just self-educating. You don't listen to YouTubers, in all honesty. Because most YouTubers don't really give a rat's ass. They have their own thesis, their own. And I include myself. I'm very direct and open, and people don't like it. Some people do. It's neither here or there. But I think you should really do your own homework, your own DD, self-educate, and then and you'll have a better chance of making money in the market, because a lot of people will say the market's rigged, and it is. But you got to learn how to play a rigged market, and that's something I learned how to do and understand it. And
I think we've all had that learning over the past couple of years, right? We had one idea in 2021, and if you didn't capitalize on it in June, then you've just been wrecked. Whether it's manipulation or just the price coming back down to fair value, that's an argument for another day. But Mike, we've seen in dozens and dozens of retail plays, I know you watch some other ones too, everybody just gets wrecked with this diamond handing strategy. And it doesn't mean I'm trying to talk anyone out of it. If that's what you want to do, then absolutely do it. But like you, Mike, I think that 2024, because of the box office being a little lower, will be a year for volatility trading, and then try and position well into the end of the year.
One thing that, and this is something I just got to say this, is that if there's a play that comes out, because everybody puts out alerts or puts out plays and it has some good information. If you're not early, and if you don't get it right on that time, or you're able to get it at the bottom or close to the bottom, for me, I don't even chase it. There's always going to be another play. Something runs 30, 40%, chances are I'm not going to chase after it. Chances are I'm not even going to do anything. I'm just going to be like, okay, well, it's at its time. I don't know how high it's going to go. I don't know what's going to retrace. It's just pushing all over the place. So I just hang back and I'll just wait. People say, well, jump in now. It's a great time. AMC, I was in early. I was in early January, actually like the 20th of January, 2021. So I was in early. Is the reason why I had such a low cost basis. And a lot of people, they feel that they have to catch every single one, and they end up losing money. You get in high, you get out, low, and it's just not how it works. If you're not in early, just don't do nothing. Just relax, just hang out, just chill, and just wait for another one to come, because it's coming. There's always another one. That's one thing that's guaranteed. There's always another one.
That's one thing I've said over and over the last couple of years, Mike, the exact same thing. And I find it odd, even though you and I disagree on a lot of stuff about AMC, that we agree a lot on trading strategy. Like, I'll pass on a lot of plays if I think that they've run up too high. The higher it goes, Mike, the more nervous I get about buying in. Like, I was not going to buy GameStop at 300 or AMC at 60 or 70. It goes against my fear of getting rugged.
Right. And self-educating, who I am today is definitely not who I am 3 years ago or 3.5 years ago, however long it's been. If I knew what I knew today, and this happened in June, I would have sold my whole position probably in the 50s and 60s and have been ecstatic. But I didn't do that. I didn't understand enough. I was like, I need a diamond hand. I remember the 801. I tell this. My better half and I, it closed at over 801, and we were so happy. We had no fucking idea why. We're just like, we're supposed to be here. Everybody said we're supposed to be here, and we did, and it was all for nothing. And now I understand that there's a lot of stuff going on that retail thinks that we have the money to move markets. And I used to think that too, but institutions have the money to move markets, and we're actually a product where they take money from. And unless you can understand that, and then there's we still have some leeway. We still have some things that we can do, but we're out moneyed, overall in any type of movement, we're out moneyed. There's very few times that we actually make it happen. I think that
I see, Mike, a lot of smart people talking about people that know more than I do, talking about like how pick any random stock, even a penny stock, when retail starts piling into it and the volume starts going up, it triggers some of these high-speed trading algorithms to jump in and play with them based on the volume trigger. And so these become self-fulfilling run-ups, but they're jumping out before we are. You know what I'm saying?
Not only they're jumping out, they're setting themselves up for the downside as well.
Yeah.
Because they're on the inside. Yeah. And so once they help the volume run up and they going the high frequency trading, they're going back and forth. And everybody's like, oh, it's running. These guys are setting it up. And they're like, okay, they're getting to their put positions and the short positions. They're doing all these things. And then right when the bottom falls out or it stops.
The volume, when the volume dries up, they come in and short it.
They're making money, man, hand over fist. And that's something that's, if you don't, you have to understand that. If you want to be a trader, you have to understand that. If you want to make money, you have to understand that. But here's my big thing this week, which I'm keeping very close eye on, is NVIDIA earnings. That's going to have a big, huge impact on a big impact in the market.
A very big, huge impact.
A very big, huge impact. So that's one thing I'm waiting for. And I mean, I believe NVIDIA is overvalued by far. I think it's propping up the market. It's propping up a lot of short positions on other companies. Like NVIDIA is just a money laundering scheme. I'm not saying it's not a good company, but I believe it's just overinflated like you wouldn't believe. And when that bottom falls out and that retracement, or it actually comes back to just as normal value, it's going to have a major impact not only on the stock market, but everybody's beloved ticker symbols.
Yeah,
and that's something that I'm watching out for.
I'm praying for two things, Mike: that they beat earnings and they give good guidance for the next 12 months. Because if they don't do both, then it could have a comeback to earth moment on that stock price. And like you said, it could have a broader impact on the market.
Yeah, and that can affect all the way into next week, which is AMC earnings. People think that AMC or GameStop is just their own. They can actually move the market, and possibly they can, but there's a bigger impact on the ticker symbols due to the market than AMC, GameStop, or whatever ticker symbol does to the market. There's just much more than just one ticker symbol or two ticker symbols.
Yeah, I would encourage people, if you're just watching one ticker, broaden your horizons a little bit. Keep an eye on the indexes, the economic news, what the Fed's saying, what announcements are coming out that week, and earnings from the big companies that drive the market. Because I don't know about you, Mike, but I'm not a big believer in what is it they used to say, the negative
negative beta?
Yeah, the negative beta theory. I'm not a big fan of that one. If the market crashes, everything's coming down, including AMC and GameStop, in my book.
No, I agree with that. I'm going to give a shout out to the Bad Ape, Steven, and Grandpa Barney. What's up? Love you guys. This is my peeps right there. I know that they have some good people, man. Some good people. I'm looking at who's in here right now.
Yeah, I'm checking the YouTube chat also to see if we got any questions. Cancel Bubble says, have you guys seen the Sora AI videos? I have, Cancel Bubble. I'm kind of excited and nervous both to see how that technology progresses over the next couple of years. Jeffrey,
I haven't seen any YouTube videos. Go ahead.
What was your question, Mike?
Oh, I didn't have a question. I just say I haven't been watching YouTube videos. I just don't watch any videos no more. I just pretty much just hang out with you guys in Discord and a couple other people, and just trade. That's pretty much it.
How can you stand to hang out? How can you stand to hang out with me since I have such a different viewpoint on things than you?
Because we're adults, man, and all that baby shit doesn't fucking bother us, bro. It's like we can have a difference of opinion and just be like, okay, cool, agree to disagree. Okay, next. It's all good, man.
I love you for that, Mike. You're one of the few that can actually have a different opinion and not call me either paid by Adam Aaron or paid by a hedge fund, which I get called both. It is amusing. Guys, just because someone doesn't agree with you 100% doesn't mean they're paid by somebody. We're all individuals, and everybody has a different way of looking at things.
And between you and I, we have a vast difference of opinions on a lot of things.
Oh yeah.
I think we disagree more than we agree, but in the way we trade, it's almost similar. I think people need to take note of that too. You could be totally on opposite sides of the pages, but we're in this game to make money.
Yep.
And people trade emotional with emotions. Something that Steven said. He says that people trade with emotions. You got to be cold and emotionless in order to trade. It's just another transaction. Once I understood that fully, I treated it like poker because I used to play back in the day, and so just it was another hand. So it was another transaction. Once I just grasped that, it was pretty easy to start showing improvements and doing a lot of things the right way instead of being emotional about it.
And emotions fuck you up in two ways, right? They will make you buy something at the top when you know damn well you shouldn't be buying it. But they'll also prevent you from buying something when it's reaching a logical bottom, and you can see it on the chart that things are turning around, but you've become so negative and emotional that you refuse to buy it.
Being emotional too, yeah. And it's not only being bullish on something; it's being bearish as well. You get stuck in a position. People are like, well, I'm not selling. There's no way. Like, and you just siphon off money. It's like you got to cut your losses. Maximize your gains and minimize your losses. And one thing that again, I'm gonna refer again to Steven, because we talk quite a bit, is the fact that he says that this stuck out to me more than anything was the fact that there's a lot of people out there saying that we need a bigger community. We got to do a lot of things. But this is not a team sport. It's an individual sport. When it comes down to it, it's all the DD, it's all the information you have, and you behind your phone, your laptop, your computer, making the choices and decisions. Either you buy or sell, and you buy calls or puts. It's you making the decisions. You get some information from somebody, then you make a decision, then you get upset because the information you got was bad. Well, you're just listening to somebody else. You're not actually looking at the information yourself. You're not trying to find it and understand it. And that's the issue, because then they want to come back and point the finger or say this fucking guy, this YouTuber, this influencer, he's only doing it for this. He's a paid shill. That's where that all comes from, because nobody takes responsibility for their own transactions.
Yeah,
and until we get a hold of that, then nothing's going to change really.
I think it's fun and entertaining and fine for all of us, whether it's on Twitter, Reddit, YouTube, to share our thoughts and opinions and have discussions like this. But at the end of the day, whatever you hear, whether it resonates or it is revolting to you, that is your moment to say, does this make sense? Can I go verify what this person said? And then you can take personal accountability for what you do next. Don't ever just listen to somebody and say, well, I did it because he said that. That you're not taking ownership for your trading when you're doing that.
There's been plenty of times, even in these chats too, where the collective group has an opinion and I think something different. And that's just what I believe, and that's my perception. And I'll stand my ground and continue to move forward. I think that also comes with maturity as well. It comes with maybe trials, maybe tests in life. I mean, it comes with a lot of things to just have your own mentality, your own mindset. And even though everybody in the room is telling you one thing and you still think something else, and able to react on your own, because every situation is different. And people need to understand that as well. Is your situation different than mine? Your bankrolls are different. Your accounts are different. Who you trade with is different. Your lifestyle, just everything's different. And all these factors come into play.
A lot of it is tough too, Mike, for individuals, especially if they're not used to trading or they don't have any sort of financial background, like reading filings, 13Fs, 8Qs, 10Ks, 10Qs, reading a balance sheet. All of those are tough if you're not used to doing it. But your journey can start today, like one step at a time. I've been doing this for decades. I didn't start out knowing it all. I still don't know it all. I learn something new every single hour of every single day. But for me, it's a constant journey, and I question everything. And I would encourage all of you guys listening to make a resolve, at least one time a day, try and learn something new. Question something that someone said, go look up the facts on it and see if it's correct. And if you don't have time to do that, then over the course of time, look, we all make mistakes, but over the course of time, has the bulk of what that person said been correct or not? That's the second barometer that I'd use.
I work in the natural gas industry, and one thing that I learned at a young age, it might have been in my 20s, was that when you're not good at something, and people say, "Well, I'm not going to do that because I'm not good at it." Well, guess what? Guess what you're going to be doing from now on? That thing you're not good at, and that's one thing that I've learned all the time. Is like, if you're not good at something, you keep doing it until you become good at it. Then you find out what else you're not good at, and you keep moving on and you keep bettering yourself that way. I think Mike Tyson had some quote like that. It's something like, you do something you hate until you love it. It was something like that. And I remember hearing that a few years back.
I wonder if we're just wired that way, Mike, because that's always how I've approached life. Like when I had 15 years in a corporate job, and I changed jobs within that company 7 or 8 times in that 15 years. And every job I applied for was 2 grades above where I was at. So there was no way I knew everything going in. It was always scary. But I believed in myself and my ability to learn. And that's one example in the job market. I when I was single and wanted to meet women, I hated dancing, Mike. I was scared. I needed a 6-pack to get out there. So I said, I'm going to overcome this fear and take some fucking dance lessons and go meet some chicks, which is how I ended up meeting my wife. Funny how that all worked out.
Right.
Years later, that time I put in learning how not to be petrified on the dance floor worked out. And same reason I took acting lessons, like being up in front of somebody speaking terrified me. First time I went to an audition, by the way, guys, I'm not a paid actor, never been paid for one job. I did it just like dance lessons, just like I'm going to do guitar lessons. Got my new guitar back there. Starting from skill level 0, just personal improvement, conquering fears, learning something new, bettering yourself. And whether it's dancing, guitar on your job, or learning how to read a balance sheet, challenge yourself to learn something new every day.
Yeah, correct. We're talking about the balance sheet, is that you and I, we have similar trading strategies, but we go about it 2 different ways. You read the balance sheet, you see things coming up, and you make your moves that way according to what the balance sheet says, or what do you call it, a 10K or 8K, whatever that is. And what
it
they
depends,
say,
Mike. It depends if I'm doing a momentum trade or a longer term trade. But keep going, and then I'll fill in some color.
And then for me, I'm speculative. I speculate what may happen, and I go look at the market, maybe things that come out, maybe data that may be dropping that may affect certain sectors or maybe certain stocks, and that's how I trade. I speculate and make moves that way. And I think the ultimate result is that there's no wrong way to trade. You guys just know what's comfortable for you. But most importantly, you have to know your risk tolerance. You put all your eggs in one basket. Is that a good way to trade? And honestly, no, but people do it. But, and they don't have a high risk tolerance. So then they end up losing money, and they're devastated. As to some people can have a high risk tolerance and put all the eggs in one basket and lose 50%, and they're like, okay, that sucked, and not even sweat it. Just know what your tolerance is. That's probably the biggest thing, because there's going to be swings, and it depends on your bankroll and your lifestyle. There's going to be some massive swings. And if you can't handle those, then you should probably dial it down a little bit, or ease back on how much money you're putting into the market, or even just invest in general. But I think everybody should invest.
getting back to the point you said about me about trading style. So I do spend a lot of time looking at the filings because nobody else is doing it, Mike. But if it's a momentum trade, if it's something I'm going to be in for a day or 2 days, I usually don't spend a lot of time worrying about them because it doesn't matter, right? Unless it's a complete piece of shit penny stock. The only thing I'll look at is I'll look for this, Mike. Is this thing running because they have either warrants, convertible bonds, or a dilution that they want? They want it to run up so they can dump on people. So I'll do a very quick check. Like then it helps me, even if I'm holding it overnight, it helps me know my exit point. If something's really, really moving, do I have to worry about getting rugged after hours by a company dropping an announcement, or do I not got to worry about that? That's the only thing I look at. But on a longer term play, if you're holding it months or a year, then it becomes critical, especially if you bought in really high, to know what's the working capital of this company look like on the balance sheet. What's their debt position? Are they making positive earnings or negative earnings? Because it's going to get ground down into the dirt if everything is not copacetic on the financials. If you hold it for a long time, right? You know what I'm saying?
Right.
If you're buying a stock that's been beaten down, like when I bought Disney at 78 and 83, I knew that their financials were, over the past few decades, pretty damn good. And that if yes, there was a little bit of risk, but that was a calculated risk I was willing to take that things were going to turn around. And what's it trading at now? Like 111? So that for me, buying Disney cheap was a longer term play where I needed to really spend more time looking at many, many different filings and quarterly statements.
But if Disney right now trades at 111 and you're looking at what, a 20%, 23% gain, see, and that's over a course of months or a course of time. And people, this is the problem too, is that people want the home runs, they want the big swings, they want to.
We got to get out of that mentality. I mean, it's fine if that's how you want to do it. Don't let me talk you out of it. But over the long term, that you're going to end up blowing up your account if every play you're shooting for a home run.
Taking the 10%, the 5%, that adds up. And that adds up and increases your bankroll. And therefore, you can actually make bigger trades, bigger moves down the line, which in turn generates more money. But, just sometimes this mentality that a lot of people have, it's, and again, I understand that people don't have bankrolls like that, especially as times are getting hard with inflation, kicking back up and a lot of things coming up showing that, hey, you know what, we might have some more, things that are not looking good. But, one thing that I think that people need to just try to get a grasp of is that, first and foremost, you take care of your family and your responsibilities, and then everything else comes second. People, I know there's someone out there that says, well, if I actually put my money in here, it's the last money I have, and I can actually triple it or quadruple it, and I can actually take care of these things. That doesn't work that way, because chances are you're going to lose money. Or you're going to lose that money, then you're actually in a worse position than you are. Take care of your responsibilities first. And you hear me say that all the time on videos or in other chats, just handle my responsibilities, and families, God, family, it could be business, career. It just, the work stuff is behind, but it's family first above anything, man.
All right, Mike, are you playing any stocks for a longer term trade like blue chips, or are you still concentrating mostly on momentum stuff?
For right now is where I sit, because I have AMC and then I have that huge position in GameStop, and that's just shares. I have nothing else. I did have a pretty sizable put position on AMC that I closed on Friday, and I was very successful with that on the 40-hour trade. I don't know if you were in the calls for that, but as of right now, I'm just sitting on GameStop and shares at AMC, and that's it. I'm looking for calls to get into AMC this week. But before I do, I want to see what the market's doing, and definitely I need to keep an eye on NVIDIA, because that's a market shaker right there. So
are they
being patient right now?
Are they on Tuesday? I know I looked.
I think it's Wednesday after hours.
Okay, I looked at it a couple days ago and already forgot.
I think it's the. Let me see.
You'll
I
be
believe it was
happy.
Wednesdays and after hours.
You'll be happy to know, Mike. I bought a little GameStop when it was bottoming out there. Also,
21st on Wednesday and after hours.
I snagged some GameStop at $13.75. I didn't quite get the absolute bottom, but hopefully they get some upward momentum between here and their earnings. We'll see.
I think GameStop's going to do pretty well in earnings. You know, I'm excited for GameStop. I see them long term. We had a conversation about this with another person, and I say, well, they have no clear path, and I think that is something that's, you know, again, speculative, right? They have no clear path, but you know, they're debt free and they have a lot of cash, and they're able to do a couple things that other companies can't. And I think just that alone, they could actually pick and choose. You know, anything, nothing's guaranteed in the market, and if you could just, you know, understand that too as well. But I like them long term. If they do great things, great. You know, if they don't and something goes south, then I have no choice but to cut my losses. But as of right now, I'm a big believer in them long term. You know, probably like 2-3 years out. And you know, when it comes to the money side of it, I see, you know, my average I think is like around 17. After you go over it again because I had bought some, but might be like in the high, I don't think it's 16. I think it's somewhere in the 17s. I believe I was at the low 18s, so it might be in the 17s. So I'm red right now, and that's fine. But long term, I think there's a lot of money to be made there. So I'm willing to just hang out and stick it out for that. But you know, I haven't saw Dumb Money yet. I started watching it, and it's not a movie we can watch in front of the kids. So we only got through like 10 minutes of it and turned it off. But we're planning on watching it this week.
My cost average on GameStop is around $14, and I'm hoping that I'll get out of that green prior to earnings. But Mike, you and I will probably be talking about this a lot as we get closer to earnings, because as always, my fear is, well, what if they just blow out the earnings, you know, more than I'm expecting, and then it goes up more than $18 or $19. So that'll be something for me to think about over the next month or so. But I mean, right. if I got out at 18, you know, in at 14, out at 18, I'd be happy with that.
That's a good move. And again, that's the thing, is taking profits. Taking profits from out. People feel like it's like taking profits like some type of voodoo, or you take profits are going to die. Like, no, taking profits is something that you have to do in order to survive. You know, so. But that's what I say, an AMC in the short term, you know.
Like I heard Avid Trader say, I listened to his video on GTII this morning, and he said no one ever went broke taking profits.
Agree. 100% agree. That's a great. I got to go look at that. I might just steal his tagline, because that is great.
I invited him to come in and talk today. Not that he wants to talk about GTII, and I don't blame him. He was getting a bit of heat over the past couple days, for the same reason, Mike, that you and I get heat on any number of plays, because maybe we say something that some people don't agree with. And Avid Trader was a big proponent of GTII back when it was around 40 cents to $1 before the run up to $9, and he sold into that run up. And then I think he continued to talk about it for a long time, which was after the run up and it started coming down. That's when I started saying only occasionally. I don't bash GTII, but if someone asked me about it, I would say, look, this play is done. Over the long term, this play is done. This company has no revenue. It's not really a company. It was a beautiful FOMO / short squeeze, run up, whatever you want to call it. I don't care. But time to get out, take your profits. But Avid said on his video or on his tweets over the past couple days, what I've been saying for the last 2 years, like, this is not a company. Everything they've had on the plate, including the restricted stock dividend and the 1-800 law firm, like, all of that went nowhere. It didn't help anything. And he basically said, if no catalyst happens, you know, what's to stop this company from going down further? Although I think, Mike, speaking of GTII, as it got close to 20 cents, I was like, it might be cheap enough now. It might be bottomed out here enough for me to throw a couple $100 on it just for fun, because
right.
you never know when the next pump is from Ham and his gang, the guys that are helping create exit liquidity for the insiders.
Yeah, man. Just you know that GTI. There's finger. There's a couple of people that hey, jump on this. This is gonna be hot, and I'm just like, nah, man. Like, I'm good. That stuff it's honestly, it was just beneath me. People get mad, be pissed off. I don't give a fuck. But it's just beneath me. I don't need that. Just that petty or.
I guess my
waste of money.
Coming home with what Avid was dealing with, though, he was dealing with a lot of anger, and you dealt with a lot of anger too. When you say something that people don't agree with, and I would just ask everybody, whether you hate AMC or you love it, whether you hate GameStop or you love it, or any ticker, like, be willing at least to listen to other people and have a conversation with them without taking it down into the gutter. I have conversations with people that don't agree with my conviction or my thoughts. Mike, owning the float, our co-host here, being one, I have conversations with people like that every day to test my own, like, am I correct here? Let me just listen to what he's saying and see if it makes any sense. And if it doesn't, we can still be friends. Mike, how many times have I called you bad names, Mike?
I don't know, every night.
Never, because I don't do that stuff. I think people have opinions, and I'll listen to it. And it either I listen to it and I say, well, that's his opinion and he's entitled to it, but I don't agree. Or I say maybe there's something here I need to dig into.
Yeah, we disagree on plenty, and that's fine. And that's one thing I can appreciate now. They just disagree, but we get our point out, our ideas out, and you can take what you want from it. I think it was something like Shaquille O'Neal said. He's like, his father used to yell at him all the time because he was a sergeant. He says he always said, you don't listen to how he says it, you listen to what he says. And that's what people, they ridicule me or they'll be upset about something. I'll still listen to them. Like, I was on a space call yesterday or day before yesterday, and some guy, had a couple of things to say, and I thanked him for it. I thanked him for just being real and honest. I think his name was Sean. I said, thank you very much. I appreciate it. And I just had to clarify something. That was it. And he's like, well, thank you for accepting it. And it was like, cool. I have no problem with it if you come in a respectful way. And if you come in a disrespectful way, that's beneath me. So my time, I'm not going to waste energy on you going battling you back and forth and trying to change your mind for what? It means nothing, It means absolutely zero.
Hey, I see Mike V came up and Frank has joined us also. Frank, I'm going to send you an invite. And Mike, I wanted to give you the floor for a minute to talk about box office. Mike is an AMC investor. I've been watching the box office. I think we're somewhere around 700 million, which is lower than I'd like to see it halfway through Q1. But we do have Dune 2 coming out.
Hey, Tony, let me. You can give my co-host to something else. I'm going to go tend to the kids. I've been here for about 45 minutes to give somebody else another opportunity.
All right.
I'll drop in when I can. So I thank you, man. Appreciate it. God bless everybody. Take care.
Time. Mike V.
Yo, Tony.
How you doing, Mike?
Good. How are you, sir?
Good. So my movie that I saw this weekend was Bob Marley yesterday, and I booked my tickets for Dune 2, and I have a couple of other ones that I'm going to see in between now and into February, because as you know, I think one of the best ways you can support the company is by going to a movie and buying some concessions. But let's talk about box office right now. What are your thoughts about where we're sitting at halfway into Q1?
Yeah, I think as expected, January and February were pretty subpar. And, there just wasn't any content out there. The one thing that I'm keeping my eye on, though, is the pre-sales and the hype on Dune, and looking at the March releases. So I think we end the first 2 months of the quarter, we'll probably end up over 800 million. And what I really want to watch out for is how well March does. Because I'm kind of thinking right now that there's a chance that we do better than Q1 2023, looking how well March is tracking already. And that would be a massive overperformance. Like if we ended up with a $900 billion month in March, which I think is probably plausible right now with the releases and the way some of these releases are tracking right now, I think that would be a shocker. But I'm kind of like 50-50 on that right now.
Okay, in that most bullish scenario, what would that bring your Q1 number to for domestic box office?
Yeah, so I'm thinking over 1.8.
Okay.
If say we had $1 billion, if we had $1 billion, $900 million March,
that would be a dream come true, Mike. If we could see that $1 billion in March.
Yeah, I was just looking back at some of the other, I thought, comparables. I think Dune 2, the way it's looking right now, might be comparable to, say, Super Mario in April of last year. So that did about, that was over 500 million domestic. And then you have some Ghostbusters, there's that new Godzilla movie. And then there was one other as well, to a bigger name. So between the rest of them, if you get, a couple $100 million of box office from those, could be a possibility. And I don't think it's an outside chance anymore. I think it's maybe a 50-50 chance. But worst case, we might end up with like, a $700 million month, and we'll end up somewhere around 1.65 or something.
I'm stealing my nerves for like 1.5, 1.6, but I hold out hope for something higher. But like you said, we'll just have to wait and see how Dune does, because we won't know till we know.
Yeah, after the first 2 weeks of Dune, I think we'll have a good idea. But it's looking positive. There's certainly lots of hype, and they might sell $200 million just in those Dune buckets if they keep showing up on Saturday Night
Live. When I went to go see Bob Marley yesterday. Was it yesterday or the day before? I forget. This weekend I went to go see Bob Marley. I think it was Saturday. Wait, today's Monday. This 3-day weekend's got me all messed up. Anyways, the bartender at the AMC there, he knows me just because I'm there all the time, and he's also an AMC investor, and I can tell he listens to all the DD just because if I go buy a beer at the bar, he can chat with me for 30 minutes on all the latest. And so I asked him, I said, what do you think Dune 2 is going to do? He said, oh, Tony, it's going to do $1 billion domestic box office. I was like, wow, I would love to see that. And then,
I don't think it's going to do more than like Star Wars.
That's a little higher than my number.
Yeah, but I think like the first Dune came out in 2021, and it was day and date. So I think, I honestly think probably 300's the floor on Dune, and you could overperform into like 4 or 5, depending. Like the way people are talking about it, they're like it's the Empire Strikes Back of the generation. Well, like it's universally getting just massive praise from every critic out there. So I think it's got a good chance of seeing some really big numbers, and that's kind of what's got me hopeful for March. And like I said, plus there's a couple other really good flicks coming out in March. The problem with that though is in April looks really weak again. And until we get into May, and then May starts kind of picking up again.
Yeah, I'm kind of like thinking the first 6 months of this year, I'm just kind of like, it's a wash. It'll be what it is. I can't control it. But the second half of this year is where I start getting a little more interested. But I'll hold out hope that Dune 2 will surprise us. I'd love to be surprised.
Yeah, I think the key thing now is hope there's a couple real breakout hits that kind of drive the box office up a bit and reduce the cash burn. So there's less shot of an additional $100 million share offering or something else like that if they want to shore up the sheet. So if we reduce the cash burn through the first 6 months, then it's less likely that we see a dilution this year, especially if we get into a Q3 that's maybe close to break even and a Q4 that's profitable.
Yeah, I don't know, I'll leave it up to the audience by a show of hands. If you guys want us to run through the cash burn and dilution concerns, you can put a thumbs up. We've talked about it over many live streams and previous calls, but I'm happy to, and I'm sure Mike is, to do a recap on what we're looking at on the income statement and balance sheet. And what our concerns are for cash, not concerns like, we're in trouble, but just like a realistic viewpoint and what we're watching. Is that a fair way to say it, Mike?
Oh yeah. Just keeping an eye on it. like I said, I still think the price is quite low right now. It's good value, even if we saw another 50 million shares go out there. When it comes down to it, the float's just a number, so you can just do your calculations with a little bit of bigger number on the bottom. But the way the price starts now, it looks like I said, unless there's 2024 completely collapses and nobody goes to movies the rest of the year, I don't think we're in too much of a risk here now.
I'm on the same page, and that's not financial advice for everybody, but I think, I was saying this before you came on, Mike. I was buying at prices lower than this, expecting some run up into Q1 earnings. So I thought the price was fair. I thought the chart was saying it was bottoming out. And the only thing that worries me is mainly market risk, things that are not related to AMC.
You still stand by your Q4 numbers there, Tony? With I know you had some numbers that were even better than mine. You're thinking only like 50 or 60 million of losses in some scenarios.
My video's up. I did that video 6 weeks ago. So I'd have to pull up the spreadsheet to tell you exactly what it was. But I stick by my numbers, and I got smart, Mike, and because I can't predict each quarter what percentage of the box office AMC captures. You got to, is it 28%, 29 and a half? What percentage goes to AMC? That can swing the numbers a big way. So I have my number, but I have a range also. Yeah,
on average for 2023, it was 29.5% for the first 3 quarters.
But a 1% swing can make it. 1% swing can make a difference on what percentage we get.
Yeah, at the lows, I think it was 27%. At the highs, it was like 31. I think it averaged 29.5. But you do have the distribution in Q4, so I think you have that you probably have a bit of a higher number. They were saying Taylor Swift was overperforming at AMC as well too. So you're probably, I think you're safe to look at like a 30% range for Q4.
We'll see, and I'll do a debrief after the numbers come out, and if I was right, we'll say I'm right, and if I was wrong, we'll go through what I got wrong and how we'll improve the model for next time. Hang out here for a minute, Mike. Let's bring up Rolf for a second. We got a couple of other speakers. Rolf,
hey, good afternoon. Hey, thanks, guys. Just in line with what you're talking about, so that's kind of why I raised my hand. So a question, I guess, for Mike, who I've never talked to before. So question for Mike and for you, Tony, and I think I see Super Steven on here too. In line with earnings, or not even earnings, just with box office totals, for calendar year 2024, I've noticed, I saw the data posted, Tony, on your Discord. Through yesterday, it looks like the total number of titles released by Hollywood is off by about 50 compared to a year ago. And I'm of the opinion that the more movies that Hollywood throws out there, the easier it's going to be for AMC to make their way. So I'd like to ask, when are we going to return, or when is Hollywood going to return to throwing out the number of movies that they've thrown out in the past?
2025 is our first shot at that.
Yeah, the encouraging thing, I listened to the Cinemark earnings call, which I recommend everyone listen to, because they talked about the industry in general. And there were some pretty positive questions that were coming out of it. They had one analyst, and he was talking about the movie releases, and they were even kind of expecting with the streamers ramping up content that maybe by 2025, 2026, you might even see an overall increase, because you got streamers throwing themselves in the ring and adding 10 or 12 releases a year. I don't know when it gets back to pre-pan levels, but I think 2025 would be the earliest. I would say 2025 is most likely an increase over 2023 for sure, but maybe 2026 is more likely to in those $12 billion box offices.
To be fair, Mike, they did not say, right, that 2025 we would eclipse pre-pandemic levels. They said we would resume the growth curve towards it, getting back to pre-pandemic levels.
Yeah, that is correct. So they expected 2025 to be back on that trajectory that 2021
higher
to 2022 to 2023 sure. Kind of thing. Yeah.
Does that answer your question, Rolf?
Yeah. Thanks, guys. Appreciate your input.
All right. Let me bring Frank. Do you have anything you want to add in? You've been waiting for a minute, and then we'll bring weight loss up.
I'm not much of an AMC guy, buddy. So I'm just listening to the conversation.
Frank, we're on a tangent talking about AMC for a minute, but I wanted to just get your input just on general trading strategies, because from time to time you and I talk. Like if you had some general advice to a retail trader, whether they're looking for probably not a blue chip portfolio, because that's not what you specialize in on Twitter, but all of these plays, these momentum plays, or the riskier speculative plays, what's your general trading strategy or any tips that you might want to share with people?
No, buddy, we can call a spade a spade. I specialize in shit codes. We know that. I take all these exciting names. No, that's okay. Listen, everyone's got their niche. I just, I like these high risk, high reward plays. And, one way I've found to mitigate the risks in these is, usually when I get on something, they usually catches some momentum along the way, and people get a little greedy and they're looking to sell the top on everything when they should be selling the whole way up. And if they really like the company on the pullbacks, because there's inevitably a pullback, you watch that RSI. If the RSI is still hot and the stock ain't climbing, it's time to let some out and buy it back cheaper if you really like it, or at least separate your position into two, what I call them cities. You have your hold city and your sell city. You sell half of it on the way up. If it pulls back, you buy it back. You end up with extra shares or free shares or whatever you want to call them. And, I don't care what stock it is, Tony. It could be NVIDIA, it could be Tesla, it could be, some little crappy OTC. But they all hit a peak and they find what's called retail exhaustion, and then they back off. Every pump, if you want to call it, has a dump phase. How far that dump phase goes down, we don't know. But, they all retract off their highs. There's not one stock that just constantly makes new highs every day. So, when you see the RSI hot, it's not climbing anymore, it's time to let a little bit out. Watch your inflow outflows, and when you see it starting to, the RSI is cooling off and it's starting to base out, if you want to re-enter, that's a good spot. Look for the curl, and then you can go and re-enter the position with what you sold. My goal is always to end up with free shares at the end of the day. I want to buy and sell on the way up enough times that I can end up, if I start with 1,000 shares, I want to end up with 1,500. Then that 500 extra shares, I don't mind holding that forever in case they, discover the cure for cancer or whatever it is. But there's no risk, and that's what I'm trying to do lately, to take the risk out of things, because as we've seen, there's more volatility, especially in the small caps where I play. The volatility has been astronomical lately.
I think you get a lot of flack, Frank, for talking about certain stocks, and people need to hear more, or they just conveniently ignore it. Your critics, the advice to sell on the way up. I don't know why they ignore it, because I've heard you say it before.
Evidently, I'm very convincing, and the way I present it, they think it's, the hottest thing since sliced bread. But, I'm pretty vocal about, manage risk, make sure you're taking profits. But, it's very easy to point the finger on the end of a losing trade instead of reconstructing the trade, reverse engineering it, and figure out where you made the mistakes. Because nobody ever makes mistakes. Only other people do. You know how that goes.
They're always looking for someone else to blame, Frank, when we're not there to push the button for them.
Yeah, if I had $1 for everybody that said I was the bad guy and then jumped right in my next play, I wouldn't have to trade stocks anymore.
Yeah. Sounds like you're out driving around today. Are you enjoying your
holiday? Coming back from Jacksonville. My oldest had a hockey tournament in Jacksonville, so I've been driving for 4 hours. I'm almost home now.
They play hockey down in Florida?
It's huge down here. Huge.
Really?
I grew up in New York, and hockey's 10 times bigger in Florida than it is in New York.
Okay, but you got a lot of New York transplants down there, so maybe that makes sense.
You get all the Canadians.
Believe it or not, it's too. Yeah, well, when I grew up in New York, we had rinks. Now, we're also going back 40 years, but we had 2 rinks within 50 miles. Here, I have 6 within 15 miles.
Do you have any plays that you're looking at into next week, Frank?
The one I'm really focused on is NVOS, that Novos integrated. They just changed the president on Friday, and in the press release, he put that they're expecting in the near term a big financing And I know that the financing he was looking for, he's been working on it for months and months, was a non-dilutive RC coupon, another deal where they monetize the gem collection, all things that are outside the box and non-dilutive. And he was talking numbers in the 50, 60, $70 million range. Stock at 75 cents, that type of financing would put $3 per share on the books. So it reverse split back in December, so the outstanding is only about 16 million. It's pretty small for a small cap, and I just have high hopes for it. I think he's going to bring something out this week, or at the very latest next week, that changes the shape of the company. But once again, in the current condition, it's a shitco. Okay. Until it changes, in current condition, it's junk until it's unjunk. So just have that in your mind. I'm a catalyst person.
I see a lot of chatter on X about NVOS, but I haven't spent any time looking into it at all.
I could probably take a lot of credit for that chatter.
All right.
Hey, I did pretty good in the Pumper Bowl, right?
Did you make the final bracket on the Pumper Bowl?
I didn't. Zombie's got 50,000 followers and a 3,000 person Telegram. I was up against him.
I've never heard of that guy, but I followed a few other new names based on the Pumper Bowl.
Yeah, he's a good guy. He's a friend. So it's all in good fun. Because I don't know if you saw the post I made the other day that every person on Twitter plays a role in the ecosystem of Twitter. You got your pumpers, you got your bashers, you got your skeptics, you got your due diligence guys, the chart guys. All of it, in a nutshell, is information. And you have to decipher what information works best for you. And without any of those ingredients, Twitter wouldn't be the universe that it is. So, you don't have to love everybody. You don't have to hate everybody. Just keep your eyes open and learn from everybody.
I like to follow the Twitter pumpers of the shitcos, Frank, because those plays often run, despite them being shitcos. And you can hop on that.
Every single one of them will jump and runs. They all run.
Yeah.
But the point is that you have to trade them properly.
Right. That's what I was saying. You got to be willing to hop on the train and get the F off. And, some of these people putting out like $1,000 price targets for Finger or GTI. I don't know what they're smoking, but I'll play those plays for, a few dollars all day long.
Exactly right. You have to treat them for what they are. They're highly speculative. I stay away from certain ones that have like nothing going on, and I'm not going to mention them by name, but there's some that are there's just nothing, and everything in the filing tells you stay away. So when I see those, I don't mess with those. But a company like NVOS or PCSA, the biotech, these things make 100, 200 things on the drop of a dime. Yep. But the people that hold are looking for 1,000%. Yes, you're going to bag hold. You're going to get bagged if you're looking for those percentages.
Let's bring weight loss up. I think he has a question. Take yourself off of mute.
I was just going to give some perspective on AMC.
Sure, go ahead.
So one thing, I've been noticing there was, a point of like Rotten Tomatoes, I had forgotten this, and so I'm going to go back to it. I've been trying to promote the idea that people, if they're A-listed, or if they're not, or whatever, that if you can, this is what I'm doing, go to, either Rotten Tomatoes and then buy your ticket through that, and then you can attach your A-list membership, and it buys, the ticket with your A-list, so you don't get double charged, and then you're a verified ticket holder, so you can do a review on Rotten Tomatoes.
That's the reason why. Idea.
Yeah, the reason why I say that is we also put an idea through AMC Ideas to ask them if they can connect the AMC app with Rotten Tomatoes, because currently you can do reviews for movies on the AMC app, but you don't know where that's going,
right.
when you do. And the reason why I bring it up is because there's some very impactful movies that don't get enough traction, like the Land of Bad, and right now it doesn't show you a rating from the viewers, and I don't know how many they need, but if you get enough so that it can balance out when the Rotten Tomatoes doesn't give a good shake, and where some of these studios, they only did like 1,200 because they don't, they're competing with other ones, and they increase them based on, how well they do, but they also go by word of mouth. But it would be really nice if people would know their power about how to utilize, being able to put reviews out there.
That's a great idea. I have a membership, or I log an account on Rotten Tomatoes, and I don't know if I'm a verified user, but I don't know that I've dug into how to become one. So I'll check into that, and if I can help get that message out, if that's what we need to do, then I'll certainly help push that for you.
And you can become. I have a it's a free verified account on Rotten Tomatoes and a free verified account on Fandango. And on Fandango is where you put your A-list membership or your stub membership number in there.
My wife asked me last night, why don't you become a reviewer? So I looked, because I go to a lot of movies and I always post a short review, but it's you got to be a published reviewer for like 2 years to become a verified reviewer on Rotten Tomatoes. So
so it's it's something that people But
for those of you who are interested in that, go look into that, because you can become a verified reviewer too, but it's going to take some work.
And then for the speculation for Dune and everything, I'm trying to be on the low end. I'm trying to make sure. I think we have an opportunity to match what we did in the quarter of last year. I don't expect much more than that, but I did want to give some perspective on when we are at full throttle. In 2017, at the best one ever, right? You had a March of $1,171,000,000 for 1 month. So that was with Beauty and the Beast getting 360 million. So you do have those months that break out big like that. And then for like the biggest February was 2018, where we had $1,003,000,000 with Black Panther. So in the future, those kind of months are possible.
That's what makes it fun for me. Like, right, if I can get in at a low enough price, yes, I know it's a speculative play. Yes, I know Q1 is forecast to be bad, but if there is a breakout title that surpasses expectations, things can get exciting really, really quick and translate over to the stock price.
Yep. And with Dune, it looks like, because I've been, I watch all the negativity about movies, all the people that don't like the woke or whatever, it looks like a lot of people are backing this movie. So hopefully the people that don't have it, the people have been sitting on the sidelines, come to the theater.
I only wish that they had shown, they re-showed Dune 1 a week ago or so. I think they should have shown it every single day up until February 25th, or, why did they already pull it?
Yeah, I think they made like 30 million, maybe.
I went and saw it. I went and saw it a week or 10 days ago in IMAX. It was unbelievable, because I never saw it in the theater in 2021. It was fantastic. But I saw it on TV a year ago, but completely different experience in IMAX.
Yeah, Tony, I'd love to be a fly on the wall of these people with these release windows. What was the conversation? Oh, let's not put it in that long. Like,
yeah.
You know what I mean?
I would love, same here. Like, if there's one thing that bugs me, is not knowing what is driving this decision matrix of how they set up these release windows. Exactly what you're saying. I wish I had somebody on the inside that I could ask those questions to, but I don't. So I'm out here guessing just like you guys are.
I kind of got an assumption about that one. Like the first Dune's already on streamers, people paid licensing fees to have it and stuff like that. So I'm assuming they had to probably wheel and deal and finagle and negotiate to get the re-releases out the way they did. And then it did so well, maybe they paid those guys a little bit more back for the licensing so they could get some more theater time to kind of hype it up. But I would assume it has something to do with that.
Probably
you mean
that's
like,
a good theory.
Yeah, like competing with I think it's on Netflix.
Licensing is not anywhere in my wheelhouse of expertise. So.
Yeah, so I think it was on Amazon. Actually, I think you could watch it on free for Amazon there for a while, but then they switched it back to PVOD once the Dune 2 came out and the hype started, and then but they did end up getting it back in theaters. So whoever I think was streaming it, they probably had to negotiate with them to be like, hey, let us take this back to the theaters for a week or for a couple days. How do we want to work this out? And I'm sure there's some back and forth there.
Frank Benedetto, do you have any? I'm just curious. I saw Avid Trader was here for a minute and then he dropped off. Did you get a chance to watch his GTII video, and what are your thoughts on that?
I didn't. Like I said, I've been away all weekend with my son, so I just really got home now. So I haven't had really a chance to catch up on much. But I kind of stay off of the GTI issue just because it's a very emotional play. And, God forbid you say or do the wrong thing, you just get blasted. So I just stay away from it in general.
All right. Yeah, I didn't want to make the call about GTII. I'm just curious if you had.
I hope the thing runs for him because God knows these guys have been holding that thing forever, but it's just not one of my plays. That's all.
By the way, we're digging into a little bit of DD to try and uncover if it is going to have another run. And, I've never been bullish on GTII, but if I dig up a little kernel, Frank, I'll be sure and share it with everybody.
Okay, we're here for it.
Digging through some filings this weekend. Go ahead, weight loss. You got another question?
Yeah, I think I haven't been in the GameStop for like a year or so. Have you been in one? Do they sell candy or pop or anything?
We go in. I'm not a big gamer anymore, so we go in them occasionally after a movie. If we're in an AMC that's at a mall that has a GameStop, and my wife usually is buying knickknacks or a plushie or something like that. I don't recall if they have any food items in there.
Do you think they would do it if it made sense? Like, do you think they tried it and it didn't make sense?
I don't know. I mean, that's a great question. Or I'm guessing your angle is, could AMC do a deal with them to put some of their product over there?
Well, I mean, that's a possibility. But I'm thinking, I'm not in Jimmy. I wasn't in the past. But I'm thinking of in terms of, like diversification, I don't know what kind of pricing would work with like either gas station pricing or other kind of things. I never wondered why they didn't sell candy or pop in a store that could work,
Yeah.
I wonder if did they not sell it or did it damage their product? I don't know. Too many spilled pops. You can't open. Like you could say, you buy the pop and you can't eat it. You take it outside. I don't know.
I'd sell some highly caffeinated or CBD beverages. Is what I'd do. Like your energy drinks.
Yeah, and I just feel like if they put like some food or drink or something, it might do better than like where I've seen like they have like magazine racks and stuff. I don't know. I just thought like. Interesting. Is it too expensive to license food or drink? I don't know.
Yeah, I don't know. I'm the wrong person to ask about that. Anybody, feel free, especially if you're on YouTube, if you've been into a GameStop and they have any food or drink items in your area, let us know. Anybody else want to come up with a question? Feel free. Mike, while we're waiting, did you see any of the tweets about Renaissance Technologies increasing their AMC position 14,000%?
Yeah, I saw a bunch of institutional buying And I think it's been like that for the last few months. And I think that just kind of, strengthens the thought that it's undervalued right now, kind of like what we've been talking about. So guys are getting in now. And I think Renaissance got in back in December or something?
They had a filing in November, which was good for the quarter that ended September 30th. And they had and I looked back several quarters before that, Mike. And I even looked back in 2021, and I didn't check every single quarter, but I was like, were they in the run in early 2021? They were not. But they had 38,000 shares, I think, at the end of September. And so with the most recent filing, February 13th, they disclosed that they had increased that position to 4.8 million shares as of December 29th, which was a huge increase. Unfortunately, we don't know, between December 29th and today what they've done, but they were a buyer in that September to December timeframe, which, as you or someone pointed out, I think it was Rolf maybe, is a higher price than where we're at today.
Yeah, and with Renaissance are like one of the most successful hedge funds of all time. So these guys don't fool around.
So I'll cross my fingers and add that into my hope bucket, that they see something that maybe like you and I see, Mike, that perhaps it's undervalued, and perhaps all of the bad news about dilution and debt for equity swaps are behind us, at least for the short term.
Yeah, and it looks like they would have gotten in before the dilution even happened, right? When was the last round of it? End of December?
It ended late December, and I don't know. Since the 13F filing was effective December 29th, I can't say, what day they bought their shares in that quarter.
Yeah, just have to wait and see, I suppose. I know much about their trading strategies. Do they typically hold long-term positions, or are they in and out of stocks quite a bit?
That's something I can dig into, but I'd have to look at other tickers because I didn't see a long trading history with them on AMC. I'd have to go dig through some other tickers and multiple quarters of 13Fs to find that out.
Yeah, like I have heard of them before, and I know Rentec has been in AMC before. I'm not sure the dates or the timelines. They have been in and out at least once before, though, from what I can remember.
Weight loss, go ahead, amigo.
Yeah, I was going to say, I was very encouraged to see the institutional ownership increase up to about 76 million this last week. Of course, we know that's old information, but you can only go based on information you have. Right. So it's a moving the positive direction to protect price and bullish, at least in the short term bullish, right? And then what was the other thing? I'll think about the other one. Sorry.
The other thing that I've commented on that I still see people talking about, and I think misunderstanding, but this is just my opinion, was the whole Vanguard thing. Vanguard did increase their position according to the latest 13F filing. But here's my take on it, since you're in my space call. And maybe you saw my tweet with the backup data for what I'm about to say, and maybe you didn't. But you can find it. I put it out a week or so ago. Vanguard has a historical 8 to 10% ownership of AMC going back a decade. I think the chart that I posted showed through 2016. And after the APE converted in the reverse split and all those APE shares came into the float, and they weren't holding APE, presumably because institutions weren't holding APE, their ownership on their filing in that time frame in September showed that they only owned 4% of the float, whereas historically it's always been 8, 9, 10%. And then I saw another filing. So that was September. They were at 3.8, 3.9%. Then I saw another filing in November that they had increased their position more. And then we got the one in February, which showed their position at the end of December and they increased it even more back to the 8% range. So my kind of like just common sense perspective on that is that due to the ape conversion, they got watered down on their percentage ownership. And since the bulk of Vanguard's holdings are index tracking ETFs, they needed to increase their ownership in the new float. And so we saw that progressive buying through the end of the year. And now we're back at 8%. Maybe between now and the next filing, they'll go up another percent. I can't promise that, but go look at the data. I think it becomes very obvious what happened. So for that, that for me, yes, that's good that they were buying, but it's not super bullish because they were just getting back to where they were. The Rentech, Renaissance Technologies, is much more exciting to me because here's a new guy that had 38,000 shares that increased it to 4.8 million. That to me says something. That's a statement.
Yeah, no, I agree with that Vanguard stuff, Tony. Like, that's just how you rebalance a large market-wide portfolio. The stuff that goes up in price and is taking up too much percentage, you sell that off, and the stuff that's going down in price that's not taking up enough percentage, you buy that up. That's just standard portfolio management.
I was having a little discussion with someone on Twitter earlier, and I was mostly not in the discussion. Other people were, but I chimed in a few times. And I don't know if everybody knows, like BlackRock has a large percentage of their shares are in ETF index tracking funds also. And the way, if you're an index tracking ETF, the gentleman on Twitter was asking why, these guys they're only buying, right? And if the price goes down, they should want to come in and buy even more and defend AMC. This is the wrong mindset, guys. If you're thinking like that gentleman, institution that has a index tracking fund they could care less about defending AMC. Their stated goal to their investors is to deliver a return benchmarked to the index. And as in their own words, for better or worse. If the index can go up, the index can go down, they're going to try and deliver you a return at the end of the year equal to that index. And so they don't care about AMC or GameStop, someone like a Vanguard. They're just buying or selling hundreds or sometimes thousands of tickers in and out of their ETFs to match what's going on in a index, be it a total world stock index fund or a Russell index fund or S&P, whatever it is. And if you question that, then don't believe me. Go read the prospectus of each of these index funds. Read their I want to say goal, but that's not the right word. They have a goal for the fund, and then they'll have much more color where you can understand what they're doing. And I think I gave you a fair summary. But please don't ever think that an index fund cares about any one particular company, not in a negative way, not in a positive way. Could they be loaning out your shares for extra money? Absolutely. Do they care about defending the price of Tesla or AMC or NVIDIA? No, they're making a risk assessment or they're just tracking an index. That's it. It's really very simple. Let's see what questions we have on YouTube, since everybody's quiet here in the space. And if we don't have any more questions, we'll go ahead and wrap it up. Kevin says, have we seen the profitability of AMC popcorn sales? We have not seen that broken out, Kevin. That's a great question. In Q2 and the earnings call in the Q&A section, Adam Aaron answered a question about popcorn sales. And he said that in the future, eventually when the product is fully ramped, he expects it to contribute $100 million in revenue. So that is the goalpost that I'm using. Some point in the future, whatever fully ramped means, the company is telling us in their own words, 100 million in revenue, and I'm assuming that is gross revenue, so profit will be some lower number than that. They have not been breaking it out, I suspect, because it's too small to break out. But maybe we'll hear something in this upcoming call, and I would love for them to give us some more details.
Tony, I'd like to say that you can tell me what you think. Basically, expectation-wise, I'd think that people should be open to the idea that every quarter dilution could happen. That's just to keep the ball rolling, to keep the doors open and the debt going down, you know? So if it happens in this quarter or the next quarter, you just have to expect that it's going to happen, because then you won't have you won't have unrealistic expectations.
Yeah, the way I view it, and I don't want to speak out of turn for Mike, but I'm going to go first, and Mike, you can jump in and add your thoughts. The way I'm viewing it, and when I say me, was that weight loss that asked that question?
Yep.
So I talk to a lot of other traders, sometimes for hours a day, trying to game out what we think is going to happen. And just based on the evidence that I'm seeing, that the debt for equity deals ended at the end of Q4, at the end of December, and there's been no more dilution since then. I think it was all a balance sheet management and an income statement management for Q4 numbers that we're going to find out in 9 days. Because they want to have a lot of cash on the balance sheet, and I think some of those debt for equity swaps that they did might show up as non-cash income on the income statement, which makes that income statement look better. We'll find out. That's just my theory. So I think that going into 2024, that there's right now no way that they're going to burn $1 billion in cash this year. And I also think that 2025 is going to be better. So to your point, what I worry about for dilution is, what is the cash burn going to be? That's the only thing I really want to know. In Q4, when we're going to find out in 9 days, and in Q1 that we're in right now, of the 1 billion or so we have in the bank, what's going to be the cash burn? If it's 100 million, just throw a number out there, per quarter in Q4 and Q1, then we got plenty of glide room to ease through the rest of this year, because this year only gets better as we go into it. But if we burn 250 million in Q4 and even more in Q1, then I get more nervous as we get to the middle of this year that they might be tempted to do another one. So to your point, yes, I'm always worried about it. I think that nobody should be ignoring the potential of dilution, but what I personally am watching for is the cash burn. Mike, do you have anything you want to add to that?
Yeah, I'll just give it from a different perspective for me. So when I look at the value of AMC, I make some assumptions about their future. So right now, the way I think about it is try to be conservative. I assume, they're going to go to about 90% of tickets sold pre-pandemic, which I think is a conservative estimate. And I look at what AMC's earnings are, right? And then when I look at the stock price, I kind of look at, okay, well, what's kind of like the lower end of the price to earnings AMC in the theater industry has traded in the future, in the past. So that's about a ratio of about 12 to 14. So based on what AMC's earnings are, based on the current margins at that kind of recovered box office, at the current float, I calculate a price, right? I subtract about 25% of it, and then I keep buying until it kind of hits that point. So whether there's more dilution or less, that would just adjust my numbers down a bit, but I would still kind of manage any sort of additional buying of AMC based on that, if that makes sense. So whether there's dilution or not, doesn't really bother me unless it kind of gets to a point where, I've hit that kind of trigger point. I think that 25% below the bottom end of AMC's value, basically.
The other
I don't know if that kind of answers the question without answering the question.
the other, yeah, thank you for that. The other thing that I don't know of for sure, like if we think that they're going to renegotiate and push out that 2026 debt, and I don't know, if whatever lender they're going to be talking to, what requirements they might have, if any, for cash on the balance sheet to do something like that. So,
Tony, yep. And when you're talking about cash burn, are you talking about net loss or free cash flow?
I'm talking about if I look at the cash on the balance sheet, and if we have $1 billion, and at the end of the quarter, when I look at the cash and cash equivalents, and if it drops to $750 million,
okay,
then and then the next quarter it drops to $500 million, then I start getting worried that they'll be tempted, like, hey, we want a little more cushion going into 2025 than $500 million.
Yeah, and last year, quarter four was, I have to find that up. Sorry. I thought I had the number.
Yeah,
so
last year.
I'll just be hopeful that the cash burn off the balance sheet is low, and we'll see. We'll find out together. I don't know. That's the main thing I'm looking at.
Oh, so they have it listed here, operating cash burn. Is that what you're talking about?
I mean, there's more than just operating cash burn.
Okay.
Let me pull up the.
I think when it's all said and done, if you just watch the available cash they have on hand, you can see how much cash they actually burned, and that's the metric that Tony's watching, and that's probably a good metric that's going to give you an idea.
See that
if they dilute or not. So I think if they start dipping below 600, you probably have a really good chance of them doing another offering to shore that back up to, say, $750 million or something like that.
The simplest thing, like Mike said, is look at the cash and cash equivalents on the balance sheet, because if you're trying to look at the cash flow statement, you have other things besides operating cash flow. You've got your investing cash flow, which includes the capital expenditures and investing activities. So just to keep it simple, look at how much cash is on the balance sheet.
Yeah, because operating cash flow doesn't take into account interest payments and other expenses, and even earnings. Earnings includes some non-cash items like depreciation and amortization, and it doesn't include capital expenditures when you look at the statement of operations. So if you really want to see how much money AMC is making or burning in actual cash, then that cash on hand is the number you got to watch.
Yep.
Yeah, but the expectation would be actually free cash flow would be positive before earnings are, because the DNA number is so high.
Von Steuben says, as Tony says, Vanguard invests passively. It's not stock picking or anything like that. Yeah, I made a comment like that on Twitter, something to that, similar to that. I said it's not like there's a lot of management discretion going on at a Vanguard index tracking ETF. They're trying to track the index. There's not anybody there rallying for AMC or GameStop or rallying against it.
Hey Tony, in case, unless maybe you know something or you've that I haven't considered, the cash and cash equivalents went down about 53 million from September to December in 2022.
Mm-hmm.
So they lost about 53 million for quarter four. If nothing else that I can't explain, I would expect that to be less this year.
You think we'll have less than 50 million?
Less than 53. I mean, they burned 53 million in quarter. Well, okay, hold on. Maybe I'm looking at the wrong one. Maybe I'm looking at quarter three, because from quarter three to quarter four they burned 53. So I should look at quarter four to quarter one. That's what I should look at, right?
Quarter four to quarter one, the company burned about 130 million.
Yeah.
But,
so
we're about to
earnings,
find out Q4, right?
Yeah, I would expect if earnings, but in Q4 too, they also did raises, so that the cash number is going to go up. So you have to take into account the cash raises they did as well.
Yep.
Oh, the offerings.
Yeah, there was one offering in Q3 and one in Q4.
Yeah, like 300 or something, 300 million.
So, and it's operating a bit different than 2022 though, but like I would expect, I think a rule of thumb, if they're say they're negative 130 million earnings this year, they're probably going to be pretty close to that cash burn, because you take off the DA, but then you add CapEx. It'd be roughly around there.
Laura on YouTube comment says, everyone forgets that Citigroup came up with the strategy of APE from a treasure trunk that AMC had in case of a takeover, because AMC didn't have any more shares to release. I missed the whole conversation if she was participating in one before that, but I think that everybody probably, I think everybody understands that, Laura, that AMC was out of shares and they felt like investors weren't going to approve any more increase on the outstanding shares, so they went with a plan B using APE, the preferred shares.
Yep. And also the other thing is whether they'd get enough people to vote. It's not necessarily that people were against it either, it's how many people will actually vote. So I think you need a
And I know there's a lot of people that have been asking. I don't want to rehash the past. Like I don't want to go down memory lane. We're already well past worrying about APE. We're dealing with today. But since Laura brought it up, people were asking, why didn't they do a rights offering? Rights offerings fail sometimes because not enough people subscribe to them. And I'm sure AMC did the calculus and said, we need X dollars and we need it guaranteed, and we're not going to risk doing a rights offering and not have enough people sign up for it. And they also have the ability to buy insurance if not enough people sign up for it, but that's another expense. So my guess, unfortunately, the board meeting minutes that we have access to didn't include a slide that said why they opted for the APE plan over a rights offering, but just weighing everything logically, I think they made a guess that they wouldn't be able to reliably raise as much as they needed to doing a rights offering.
That's probably fair, Tony. I would agree with that assessment. Just there wasn't time to screw around.
Chris said, if we would have approved the shares back in 2021, what do you think would have been the outcome? I mean, they could have paid off some of the debt. They could have raised cash at a much higher price. And I was against a share offering back in 2021, but I was dumb. And much like you guys, we were all focused on a squeeze. The company had plenty of cash, and we thought we had them in a death grip, the shorts. And we voted against it enough that the company pulled the vote. They saw the incoming votes. They have that ability to see what the votes look like coming in. And they're like, yeah, screw this, pull it, and we'll just, we'll see how it goes. And then 2 years went by, and the cash was just getting burnt off, and operating expenses and interest expenses, and they had to do what we got stuck with, the new offering at the end of last year. It's either that or go bankrupt. But the company avoided bankruptcy, so that's off the table, I think, for this year. And then we just pray for low cash burn, and that we slide through this year, and that 2025 is better. Anybody else have a question in the space call, or we're going to wrap this up in about 5 minutes?
Yeah. All right, I got a question. Yep.
Yeah, go ahead.
So you brought up something that's interesting to me. How often are the board meeting minutes available to us?
They're generally not available, but we got discovery on them through that Allegheny court case. So if you go on to AMC Investor Relations and go to the, I don't know what tab it is, legal, I think. And then there's, all the discovery, all the court proceedings, everything that they were required to post publicly. Somewhere in there is the plaintiff's discovery documents, and it's like 900 pages. And I have skimmed through or read through all of those many times. And I would recommend all of you go do that. Go at least go look at the board meeting minutes. If you're unsure what this board's intentions are, if you are wondering, is it true they're trying to bankrupt the company? These haters say the board and Adam Aaron are trying to bankrupt the company. I want you to go read the board meeting minutes, months and months and months of them, where they're scrambling to figure out everything they can do possibly to avoid bankruptcy. There's not one thing in there that I saw that said they want to bankrupt the company. They're coming up with every way they can to avoid bankruptcy, including if they had to sell off Odeon, if they had to cut benefits for A-List, if they had to sell up more theaters in the United States, negotiating rent with landlords, literally everything they could do to stay operational. But included in that is they were looking out 2 years of what their cash burn was going to be in the movie forecast, and they knew eventually they were going to run out. So that's one thing I'll give them credit for, is they're pretty good at forecasting. And much unlike us, who are very focused on tomorrow, they're thinking 2 years out. So if you're having trouble understanding the decisions they're making, you're probably not on the same page of strategy they are, where they're thinking, well, okay, Q3 was really good, but 2024 is going to suck. We got to survive till 2025.
Could you either put a link on this Twitter or on YouTube, or how I'm having some trouble looking for those?
Yeah, I'll throw it up on Twitter in the comments to this after we're done here.
Thank you.
Someone also posted a video. Adam Aaron was doing some sort of talk back in 2021 or 2022, and I think it was like a professional organization for CFOs or something like that. And he talked about bankruptcy and how bankruptcy is not good for shareholders and why they were going the route they were going. And he kind of lays out his thoughts on it. I wish I would have saved that Twitter post, but it's out there. Like I said, it was a couple of years ago, him talking about why they were doing what they were doing and everything else. So
at the end of the day, we're only going to know the end of this story when we get there, right? We're either going to make it to 2025 or we're not. But I have not seen any evidence that the company's trying to bankrupt itself. All I've seen is the opposite. They wouldn't be exploring distribution and coming up with new product lines and literally looking at every sacred cow to sacrifice, as they talked about in those board meeting minutes, to stay afloat. They wouldn't have. The easy thing to do would just be do nothing and let the lenders foreclose. And they've not done that. So I don't even know why that's still a thing, that people are talking about the board or the CEO want to bankrupt the company. Bankruptcy is a risk depending on box office. I mean, it just is what it is. But those of us that are bullish think that 2025 is going to be better and think that the company has enough money to survive 2024. We will have to find out together. Go see some damn movies, guys. Broke Ape says, I think the writer's strike would have happened earlier. Yeah, and back in when they were contemplating all that stuff in those board meeting minutes, 2020 and 2021, they weren't even, writer's strike wasn't even on their list of concerns. They were looking at box office that had 2024 being a great year, but that damn Hollywood strike now pushed everything out another year because all of the projects that got pushed into 2025. So here we are having to wait one more year to see what happens. Clark says, Tony, do you think if GameStop squeezes, AMC squeezes as well? I mean, that's a hard one for me to say, Clark. We do see them move together sometimes, sure. But right now, the short interest is lower on AMC than GameStop, if I'm not mistaken. And but anything can happen if you have a basket of meme stocks that is being traded somewhere by somebody that I don't know about. Anything could happen, or if retail traders just get excited and re-energize pouring money into the stocks, that can make things happen. So hard for me to say, Clark. Platinum, do you want to share any thoughts? I see in the I'm going to send you a invite, and if you don't want to speak, that's fine. We're just talking mostly common sense strategies of how to survive a lot of these retail plays and not go broke listening to bad DD. I know that for Platinum, that on some different stocks, that's one of her favorite talking points also.
Can you hear me okay? I didn't hear what you said.
I was saying we started out this call with the intention to talk about the best trading strategies or mental way of looking at things to not go broke on a bunch of retail plays that people are pushing sometimes bad DD.
Oh goodness. Yeah. So
just to catch you up, I think the general consensus was do your own DD. Don't just listen to people and take them at their word. And if something, if you look for a good buy-in price, and if something starts moving, don't be scared to take some profits along the way so that it doesn't run up and then come all the way back down and you get stuck.
Well, yeah, you never go broke taking a profit. That's for sure. I think do your own DD is important, but more important is like, how do you do your own DD? Where to look, right? So you want to look at like the company's financials. You want to see, I don't know, I feel like every time I see things on Twitter that are just random tickers or whatever being pushed, I'll look and it's like always like a, money losing company that's going to dilute on retail, right? So I guess it's good to know, are they losing money constantly? Because if they are, they're going to dilute. Like what I feel like a lot of people don't really understand what dilution does to the price of the stock, right? Like where, you have like a smaller percentage of the pie basically if they dilute. But that was one of the concepts that, I had to learn too, like how everything works. So I don't know. I just feel like I'm a newer person to the market. A lot of people are newer, and it's kind of hard to know where to look for information.
I see, you have a similar methodology. I think you and I haven't really talked a whole lot, but you have a similar methodology on Twitter, how you interact with people, of giving them fact-based black and white documents
with sources. Yes, like I don't care if you disagree with me.
Gets a lot of pushback.
No kidding, right? Like I am totally okay with being wrong because, like I said, I am new, right? Like I know that I don't even know what I don't know. You know what I mean? So it's like, if I'm wrong, that's okay. Just tell me how, and if you could link a source, that would be great, so we could all learn together.
Yeah, I would encourage people, the same thing that she said just a minute or two ago, and I talk about this all the time. Read the damn filings, or find somebody who is, and even if you don't agree with them, at least put them in in one of your corners, like, all right, I don't like Platinum or I don't like Tony, but I know they like to read filings. So let me just tune in every now and then to see what they're saying. And if I don't like it, that's fine. I'm going to keep on doing what I'm doing, and then we'll see who's right in a year. But
Right.
that's fine. You know, none of us are trying to change your mind about anything. We're just sharing our opinion. And mostly what I share is from company documents. And if you don't believe the company or you don't believe a court, then I can't really help you.
Yep, pretty much. Yeah. I mean, I try to, like, you know, a lot of people are really smart, but then really rude, you know? So it's like their information is not going to stick because they're like insulting people or whatever, or, you know, whether you're wrong or right, like there's really no need.
Yeah, I don't do that stuff. That's,
you know,
that's
exactly.
an instant block for me. You have way more patience than I do.
Yeah,
I'm too old and grumpy, Platinum.
Yeah, well, you know, but I figure whatever, like the people who matter or whatever, they'll see, you know? So what can you do?
Well, thank you for coming up and saying hello.
I actually did have a question for you.
Sure.
So in 2021, AMC changed their bylaws to like change their vote. So they like held off their meeting that they were going to have. I don't know if you remember that. And then they changed their bylaws to, instead of having majority vote, they would only need 1/3 vote. And I've never understood why. Do you know why they did that?
I don't recall that exact change. I thought you were going to talk about how they were going to, they made an effort to try and get more shares, and then they pulled it. I thought that's where you were going to go.
I remember that. Yeah, the 25 million. Yep. Yeah, because investors were like, hell no.
Yeah, that's why they pulled it, because they
I know.
they could see that wasn't going to go through, and they didn't want to be embarrassed. But
right?
I don't recall about the majority versus 1/3. I have to go back and look at that, and I don't know the answer.
Oh, all right. Well, yeah. I was just always curious about that. That's why. That's for like the however many years now. I've just always wondered why they did that.
At that point in 2021, I was like everybody else, like, this is a meme stock and the short interest is high and we all got a lot of money and we're going to squeeze these fuckers again. And I didn't care about a lot of that stuff as much in 2021 as I did as we got into the second half of 2022. And it became apparent that all of the plays were changing, and I needed to change how I looked at all of them.
Yeah, well, I was listening to their stockholder meeting, and like that's what made me start looking into the company, because when he said, you know, everyone, what did he say? That his financial advisor said he had like too much allocation of AMC. He had over 85% of his portfolio in AMC, so he would have to diversify. And, you know, when I heard that, it was like the summer, I think, of 2021, I think maybe August or something. And I was like, what the hell? You know, like that, I don't know. For some reason, that just made me look into it. I actually wrote like a post about it. I'll link it over here, because that's when I looked and saw that he changed the bylaws, and that's when I like first started asking questions about AMC. That's when I first got declared a shill, actually.
A financial advisor would tell you if you were an executive, you're too overweight.
I'll bet.
In the company, right?
Yeah.
And some CEOs will pay attention to it and some won't. Depends on if it's your baby or you're just a hired, you know, like a Elon Musk, or if you're or Ryan Cohen maybe, or if you're a hired CEO. I think the hired CEOs are going to be quicker to sell if they're overweight. But
right.
I changed my rule book, Platinum. I always have paid attention to when executives sell as a kind of a red flag. And I gave AMC a pass for that in mid 2021. And I said after that I will never do that again. Nobody gets a pass. Nobody. Which is why I sold, I sold my Bed Bath & Beyond the day before Ryan Cohen, or the same day. You know, he announced that form came out. So
the 144. Yeah, that was a good learning experience too. Where like when they put out a 144, like that means business. Like that means something, right?
I
like
did
that
raise the red flag on that when that 144 came out. I was like, I'm already out, guys, but you should pay fucking attention to this. And man, the pushback on that.
And he sold so fast too. Like that was shocking. So
normally,
pay attention to the
they're selling the
144s.
day the 140 but they've already sold by the time the 144 hits the press. Like that's their obligation is they have to file it the day they sell.
Oh, okay. See, I just thought they just had to file it in 130 days.
He's just telegraphing his future intent to sell. And I was like, no. Wait a couple days. You're going to see that he sold. And then a couple days later, we got the drop.
Right. Yeah, that is another important thing to pay attention to is like that's another thing you'll see with these like, stocks pumped on Twitter is insiders are selling. They're doing dilution. Like pretty much they need retail for liquidity. A lot of the times.
Yeah.
In my opinion.
So, I'm going to do my best, even if it's AMC, even if it's GameStop. I don't care who it is. If I see people selling, unless it's a small amount on a 10b5-1, which I might give them a pass for, but if they're selling a substantial amount, I'm on any company, I'm going to raise the red flag.
Mm-hmm.
No more passes for anybody. And I often trade that way in my own account on other stocks. If I see insiders selling, I'll lighten up my position. Doesn't mean you need to sell everything, but I mean, I don't think we should just ignore it.
I agree.
It does take a little bit of experience and a little bit of understanding what is on this form. Were they selling just for taxes because they got some restricted stock units? Okay, that's fine.
Yeah.
Were they lightening up a small amount because they needed to pay for their kids' college? Or did they sell the bulk of their stake? Then you might want to pay attention.
What do you think about Bezos selling Amazon lately? Do you think that means anything?
I've been seeing the headlines of that, but I don't know because I wasn't paying attention. Did he state why he was going to be doing that?
I don't think so. I think that I've just seen same thing.
He was going to do it. He said he was going to do it.
And then it was like $6 billion, I think, over a week or something like that.
Yeah,
right?
I don't recall if he said why he was going to be doing it. So that's something I need to look into.
Yeah.
Clark says, thank you for coming on. Julie says hi to Scarlett. Thank you, Clark, and hello to your wife, the beautiful Julie, as well. Thank you to both of you. Clark also says he doesn't think management wants to bankrupt AMC. Platinum, or you're still here. Do you think Adam Aaron and the board want to bankrupt AMC? That's a different question than do you think the company has bankruptcy risk?
Exactly. Yeah, it is a different. I don't think they would want to because wouldn't they make more money keeping it in business? Wouldn't that make a lot more sense?
It does to me.
Right. I mean, I don't think they would want
cash to pay the bills.
I mean, he's doing all these like little wheeling and dealing to keep it going. So I don't think so. I don't think he wants to, at least. I mean, he gets paid a good amount, right? So why would he want to?
Yeah. And the other thing that I look at is, his salary is $1.5 million. Mm-hmm. And he gets another little bit of cash bonus, a few more $1 million, but the bulk of his compensation plan is in shares. And which I like. I like executives in any company to be compensated in shares. Then I know that if I'm a shareholder, they're aligned with me to figure out whatever way they can to drive the share price up. And yes, I know that with AMC at the moment, they had to take some meaningful steps, i.e. dilution, to shore up the balance sheet, and it fucked the share price. But I think that they are looking out a year or two and not worried about the share price right now. So that's why I said a few weeks ago, if I see executives at AMC selling at $4 or $5, then I get concerned. But if I just see them holding and racking up all those RSUs and PSUs, then I'm comfortable thinking that they are working on a strategic plan and they see some way out of this in the next year or two to get the share price up, if all goes well.
Yeah. I mean, it would be good to see them buying with their own money, right? That's always good.
That's always good, but I think it's not the norm in corporate America, unless it's your baby.
Yeah, or unless they're forced to by like an executive policy that makes them.
Like the GameStop executive policy.
Yeah, exactly.
Yeah. Because they're compensated and because they're so overweighted with shares, it's not normal for them to go in and buy shares on top of that.
Yeah.
Unless, and here's the other thing, and this is not an easy thing to say, but when you're looking at the books every day like they are, and they know that the company was overvalued and that it's going to be ground down by Wall Street, and that they're probably going to have to dilute to shore up the balance sheet, why would you buy shares? Now would be a great time, a vote of confidence to go in and buy something, right? If we're truly at the bottom, yeah, I'd love to see a buy now, but over the last 2 years, knowing what they know probably didn't make sense to them.
Yeah. I mean, just listening to investors, it sounds like a lot of people, I mean, obviously not everybody, but a lot of people are like kind of annoyed with Adam Aron. Like it feels like when there's good news, like he'll tweet something annoying or bad or whatever.
It is annoying.
And I feel like, yeah, okay. So because I hear that a lot, and I feel like that would be something, to do, right? Like spend your own money, a little bit of it. Yeah, you have plenty.
Yeah, I agree. I would love to see them buy some, but I also understand why they haven't been. But like right now, where I'm buying down in this range because I think we're close to the bottom. I'd love to see that little hug come through to all the investors. Oh, and by the way, we all bought some shares too. Do I expect that? I don't expect it, but would I love to see it? Absolutely.
Yeah.
I mean, also, I don't know, right? What are the conditions for them to buy with the information that they have?
They still have to, what's the word? There's blackout windows where they can buy or sell that they have to observe.
So you're saying when the blackout window is, then they can buy, or they can't?
Right, they can. Like okay. Right now, they can't buy until the quarter results are out. Once a quarter ends, you're effectively, until the results are released, you're effectively in possession of insider information. So they can't trade until the results are published.
Yeah, so like I was buying all these, the low dips under $4 and stuff like that. I can't say it's the bottom, like with the next 2 or 3 quarters, there could be another bottom, but who knows, right? If there's not, then there's not. But like after like 3 quarters or 4 quarters, then you could see like, okay, well, you're probably going up,
Hell yeah on YouTube says, are you not bullish on AMC anymore? I just added a substantial amount of shares as it approached $4. Hell yeah. I have more shares now than I did before the reverse split. And my cost average is very close to the current price of the stock. So I have been buying in this range. That doesn't mean that it can't go lower. But I'm making a probability analysis, a risk analysis. Don't fucking copy my trades. Your situation and your risk profile might not be the same as mine.
Yep, there's a lot of...
Oh, sorry. Do you own bonds, Tony?
What?
AMC bonds. Do you own AMC bonds at all?
I do not. I'm not a bond trader. I understand the basics of bonds from school, but that was a long time ago. And I always, found bond trading boring because I was young. But now that I'm getting a little older, I'm starting to pay more attention. And, Markets with May is much more knowledgeable on that. So typically if I have a bond question that is outside my area of expertise, I'll shoot her over a message or bring her on to talk about it if it's a topic that I think everybody would like to hear about.
Oh, okay. Yeah, I watched her YouTube video about it. Because same thing. I'm like no general amount about bonds, but I do definitely want to learn more about it. So,
she was
wondering.
sharp enough to realize that while there was risk in the AMC bonds, they were really pushed down on price. And I think she's up, as the company gets healthier, the value of those bonds goes up, and she's up a considerable amount on the bonds. There's nothing wrong with, as a retail trader, trading bonds, but just recognize if you're buying a company that's at risk of bankruptcy, then those bonds are cheap for a reason. So you got to calculate that risk into your position size if that's what you're going with, and make sure you understand if the company has a way out so that you can get a return and the bonds go back up in price. But no, I'm not a bond trader. I don't short stocks, although I don't rule out the possibility of doing either, at some point in the future. It's just, I like bullish plays, and I mostly like bullish plays where I get a good entry and then just sit back and be patient.
Do you ever buy puts to hedge your position or no?
Yeah, I do some option trading. If I'm buying puts on something, typically it's not for hedging, although I think there's nothing wrong with that. But I will more often buy puts on maybe a stock I don't own, just because I think, I don't think that company is going to do well. And I don't short. So I can buy a put on a play, like say a B. Riley, and I know exactly what my risk is. My risk is limited to how much I spent on those puts, versus if I went short on it and B. Riley skyrockets, then I'm screwed. Now I got I got to have a risk mitigation plan for what if B. Riley goes up if I was short. So that's how I typically would use a put. And the other thing that I do is on tickers that I want to enter. Like, let's say, what's GameStop at right now? 14.25? 14.12. Let's say I was willing to buy GameStop at 13.50. I might sell a put or several puts, cash secured puts with a 13.50 strike price. And if it goes below that, then I'll get exercised and I'll buy the shares. But if it doesn't go below that, then I just get to keep the premium.
Right.
So
yeah.
I've been trying to talk to folks about that. Like if you're saying if I would buy Tesla if it only hit $150.
Oof, but wouldn't it have to be a cash secured put though?
Yes, yeah.
For most retail accounts, that's
Right.
a lot of money though.
Yeah,
to put
you
on
pick
Tesla.
your stock, right? Most of us are doing this on stocks that are under $10.
Right.
But
Yeah.
pick your stock, and if you say I would buy this stock if it hits $6, stock XYZ, and it's at $8 right now, sell a cash secured put with a $6 strike. You immediately get the money, and they'll take your cash. You got to have the cash in there, and they'll put it to the side. It's collateral that you can't use until that option expires. So that's if you have
like
plenty of
paid.
cash in your account. The other I hear other people say, well, I don't want to sell cash secured puts because I think I can trade with that money and make a higher return. Well, then do that. Do that. If you think you can use that cash in other plays, don't sell cash secured puts. Everything has risk and rewards.
Yep, that's another strategy that I've learned about and never used. But it's definitely, it's like getting paid to do a limit order to buy stock. Like you're getting paid to do it. You get paid to put in the order. So it's definitely, an option for sure. Literally an option for sure.
A lot of the options trading, I think, gets a bad rap because people don't understand them, and people that also don't understand them are talking about them in a negative way. So whether it's selling covered calls or selling cash secured puts or even buying puts to hedge, everybody seems to only be focused on buying far out of the money calls. And there's just so much more for people to learn and other ways to make money in this market.
Yeah, I think it's the learning curve.
So stick around here. We're going to continue to talk about that stuff. It's something we all, my group talks about on a daily basis.
And Tony, I gotta say, people think they have enough information to do, different trades and stuff. I've lost money doing options thinking I knew what I was doing, and I didn't, and so that's why people get a bad taste.
Yeah, well, if I'm talking to someone that's brand new to options trading, I will usually tell them just paper trade for the first however many months, 1, 2, 6, until you're not losing half the time. A lot of people lose money on options, but that's why you just paper trade them. Most of your brokers have a paper trading option. Get an idea, learn about it, try it out on paper, and see how it works out. And once you can see that the majority of the time you're making overall a positive return, you're not going to win them all. But if you're overall making a positive return, then you can start applying some money to it.
Well, and then another thing would be, once you're done doing your paper trading, only do one contract and get really good at doing one contract, because you know what I mean? You don't know what you don't know.
What was that stock that ran up last week to like $800? SMCI or something? SCMI? You guys know the one I'm talking about?
No, sorry.
There was someone that full ported like
I think it's
a couple $100,000 on call options on that stock.
Super micro computer, I think.
Right at the top, SMCI. It was posted on Reddit and got reposted on Twitter, and they expired on Friday. I think that person lost several $100,000.
That's what gives options a bad name right there.
Yeah, don't get overconfident.
Short-dated options, yikes! You got to be careful, because those just data burn will kill you, and then you have no money.
There are people that only trade options, and but I would say, if you're an expert at it, then go ahead, knock it out. And if you're consistently making money at it, then do you. But for anybody that's new, or even me, that's been doing this for a long time, I only, my options trades typically are a point or two, a percentage or two of my overall account, because there's so much risk. And if I'm right, then I just get a little bit of outsized return that week. And if I'm wrong, which I'm wrong a lot on options, then I have not wagered more money than I'm willing to lose. I will lose zero sleep over it, because I know I can make it back tomorrow or next week. Scavenger, what's up? Not Money Advice says, Tony, are you day trading options on SMCI? I am not. He says, make sure you got some meds or a bottle of tequila before doing it. One thing that I'll just say to close out the option discussion for today is use a tool like optionstrat.com or optionsprofitcalculator.com. They're free. And you can plug in those free tools the option you're thinking about buying, the date, the time, the strike price, and it'll show you the implied volatility, and it'll give you a table to look at to show you pictorially. Is that pictorially? It'll show you a picture of what your payout is going to be at different prices of the stock. And a lot of times when I think I have a great idea and I plug it in, I'm like, oh shit, the implied volatility is so high that even if it moves to where I want to, I'm not going to make any money, or I'm not going to make near what I thought I was. So if you're new, use those free tools as you're reading and learning about implied volatility, use those tools to help you before you just push the button. I still do it on almost every one, just to double check myself. All right, I think we're going to wrap it up here so you guys can go enjoy the rest of your holiday Monday. Go do some barbecue if it's warm where you're at. Go make some chili if it's cold. We're enjoying nice high 60s here today. I want to get out and enjoy a little bit of that before the day is behind us. Platinum, thank you. Mike, thank you. Weight Loss, thanks for your questions. Thanks to Frank and Owning the Float for coming up. Anybody else that I forgot? Hopefully you guys got something out of this. I think our, most of it to close out on AMC, because I know a lot of y'all are trading AMC. Most of us that are in that play right now, although we don't minimize that it's a speculative play, we don't minimize that there's market risk for the general market. If NVIDIA or if Jerome Powell tanks everybody, we generally like the stock in that $4 range, as long as the company doesn't come out with some dilution news. So we know the box office is kind of weak in Q1. It's going to get better this year. For me, this is a year of just being patient, and I'll be taking some volatility opportunities if they're presented. And as long as things go well, and my intention is to trade it a little bit in this year and then be well positioned with shares from that trading as we get close to the end of the year. And I think that 2025 is looking like it could be a really, really good year. But I need to see the cash burn in Q4, and I need to see the cash burn in Q1. So that's what I have my eye on. And I will continue going to movies, supporting the company. And I encourage you guys, if you're in the play and you got a theater near you and you enjoy movies, to go see one and go buy some popcorn, because that is important.
Yeah, go see Dune 2. And if you buy a popcorn bucket, remember 2 squirts of butter max.
If you buy a popcorn bucket, what?
2 squirts of butter maximum.
I have a case of the popcorn, the microwave popcorn that I've been working through, and my wife every night, she's like, "Popcorn again?" I was like, "Well, we've had this. We mostly do keto. Well, I do, so it's hard for me to have a popcorn every day. But this stuff is going to go. It's going to get old if I don't use it. So buy the popcorn. I know it sounds shilly. He's just pushing the products. I mean, seriously, if you own the company and you're not supporting it by spending some of your discretionary money there, then you're just a bystander as far as I'm concerned. So I'll tell you to go see a movie. I don't have any problems doing that.
And shop at GameStop. Don't forget.
And shop at GameStop. I do own some GameStop near the current price too, Platinum.
And thanks for inviting me up.
Yeah, thank you. And my wife loves to shop at GameStop. Every time she buys something we don't need. Look at I think the last thing she bought was some Play-Doh kit for kids. She's like, "But look, it's squishy and it's got glitter in it." I was like, "Okay." Easily entertained.
Nice. Well, have a good day, everyone.
You too. Thank you, guys. We will see you on the next one. We try and do these every week, and I try and bring up different speakers with different perspectives so you guys get not an echo chamber. I understand that maybe everything you heard tonight from each person or even me might not be everything you wanted to hear. Some of it hopefully was, but the intent is to help educate and foster adult discussion and show that people can be on these calls and have different opinions and still not, devolve into third grade type behavior. So thank you for hanging out. We love you. Good luck next week. And I will be around with my market open and close live streams as usual on YouTube. Thanks and take care.